Now we're going to get that FOMO top. And in the past, that's gone to 2.3 times fair value. This time, let's say we only get 2 times because there's not as much leverage this time because they cracked down on Binance and others. So let's say we get 2 times, that'd be 150. I think that's baked in the cake. So anyway, that's a long answer to your simple question.
That's exactly
why are ETFs important? They're important. They're really important. And it's because the demand isn't going away. That demand, I'll make a big statement. I believe this year, which by the way is the first year of this epic, the blockchain era, the truth net, as I call it, I believe more money will be converted from fiat to Bitcoin than the previous 15 years of Bitcoin's existence. I think upwards of $300 billion is going to get converted into Bitcoin this year. Big number.
Today, we have Morgan Creek Capital's Mark Yusko discusses his prediction for all Bitcoin investors and why the coming price surge will affect the entire crypto market in the coming weeks. Yusko believes that the coming bull run will be unlike anything we've seen in recent history, and why he believes $400 trillion is about to pour into Bitcoin. We've seen many rapid cryptocurrency price rises in the last few weeks. Yusko points out that just 1% of BlackRock's portfolio will open this floodgate to the tune of hundreds of billions of dollars in institutional capital. When this happens, he says we'll witness a 400% increase in Bitcoin alone, targeting a $150,000 price, so we could see the biggest crypto surge yet in just a matter of weeks. Let's get right into the latest interview with Mark Yusko and Raoul Pal as they give their price predictions for Bitcoin and crypto and what we can expect in the days and weeks ahead.
BlackRock, everybody's like, no, it'll never happen. I'm like, are you joking? BlackRock just told you it's going to happen. And everybody's like, oh no, it's a buy the rumor, sell the news. And the buy the rumor part worked, right? And look, there was some shenanigans, shall we say, going on. There's this guy, I think it's like CC15. I should give him better credit on Twitter. He was tracking these wallets that were just every day buying. And it was like, wait, the ETF hasn't been approved. Who is that? And I would argue, no knowledge, but I would argue that was probably an account associated with or affiliated with or friendly with BlackRock, Fidelity, somebody who was accumulating, because they all believed, as I do, that this is a monster way bigger than people think. And the issue is we just shifted the aggregate demand curve, right? So when you have supply curve, demand curve, and you shift the aggregate demand curve, the price goes up. So fundamentally, the price is going to go up. And they're like, no. Look, right after they went down, I'm like, okay. So what you saw was in the short run, they were kind of offsetting the early flows. You had a bunch of the big dogs like Vanguard and UBS and Bank of America that said, no, you clients can't buy this. Really? You're going to tell me I can't spend my money on something that I want to buy? Buy Vanguard. Like literally people should, and they did leave. Now, the flip side of that is someone has to be that, staid, stodgy institution for the old folks to hold their stuff and not go after these Ponzi schemes, whatever. So not all of the capital that was captive is going to rush into ETFs all at once. So that was first. Second, some other shenanigans, very little discussed thing, Austin, was the same day there was a new set of futures released on the Chicago Mercantile Exchange. Nobody was talking about it. And if you go back at the previous two, December 17th, 2017 and November 6th, 2021, those were tops, right? Where the future allowed the big organizations to get short and push the price down. Well, that certainly happened in that first week. So you had GBTC liquidations, you had the FTX liquidation, you had the shorts coming in. And yeah, we went from 48 down to 38 and just retraced that whole period. Remember, see, told you, total failure. The demand, the amount of new demand for Bitcoin from my brethren and sisterin, right? I'm a boomer, and all the other boomers out there, they're not going to get a ledger and buy it direct. They're not, right? Most of them. What are they going to do? Some will open a Coinbase account, like my dad, and he has a Coinbase account. He doesn't own Bitcoin then. You tell my dad he doesn't own Bitcoin, fine.
Yusko reassures that a long-expected surge awaits. Embracing an unyielding enthusiasm for the crypto realm, Yusko confidently predicts that explosive growth looms on the horizon, as BlackRock and many other crypto giants are doing just that. And while he maintains a bullish price prediction for Bitcoin, he discusses why this is unlike anything we've seen in history.
And crypto summer is a period where we're going to drift slowly, series of higher highs and higher lows. So not without volatility, we're going to drift slowly toward fair value. Well, why is that? Well, after crypto winter, okay, and you bottom, you get crypto spring, where you just kind of bounce around the bottom and it's kind of yuck and not a lot happens. Well, then crypto summer happens where the investors come back, right? They've gotten over losing money and they come back and they're like, hey, wait, if the fair value is 52K, and I was rounding and said it's 50, but according to Tim Peterson's Metcalfe's Law model, but the caveat I said is if, and I think I might have said when, because that's more demand. As we've come closer to fair value, now we've totally completed that segment of the move. Well, now we focus on the next thing, which is the aggregate supply shift. When we have the fair value doubles. So the price has doubled, not immediately. Now, I don't know if we talked about this or not, but I've kind of changed my thinking on that because of ordinals, because of inscriptions, and because of transaction fees, maybe we don't double this time. Maybe we only go up 50%. And again, the model will tell us what that fair value is. But then what happens is we'll get to crypto fall, which is the June period. That's when the craziness starts to happen. That's when the FOMO happens. Then we get into Thanksgiving and everybody goes home and everybody's patting them on the back and come on in, you get 2 turkey legs this year. Whereas 2 years ago, you're not invited anymore. You're disinvited. Humans are going to human, right? Humans are going to push this thing well beyond fair value. And then investors are going to come in and say, okay, it's time to get short. And they're going to collapse it. And it might be governments or banks that manipulate like they did with the futures and, back in 17 and 21, who knows? But the bottom line is the reason we have this 4-year cycle in crypto, it's driven by the code in Bitcoin. And the code is not going to change. Every 4 years, we're going to have a halving, which means every 4 years, there's going to be this upward pressure that's going to draw in the speculators and ultimately the gamblers who FOMO in at the top. And then we're going to crash. And those crashes will always be worse than fair value, right? When you crash, you don't go to fair value, you go through fair value because people panic and shorts get liquidated. I'm sorry, longs get liquidated, leveraged longs get liquidated, not the shorts. The shorts make money. So I do think you're right that this cycle is exacerbated by the entrance of new ways to get demand. But that's been true of every cycle.
If I give a range of targets as opposed to pinpointing a target, worst case is 150, my base case is 250, and in an obscene bull market because everybody's buying, driven by a change of regulation, then it could go as high as 450. I mean, I try not to give price projections, and I know you always pin them out of me, but the point being is, we're very public on social media, and it's just people pin their hopes and dreams on a number you give them. But my general thesis is we will rally into year end. We will correct at some point. There's a bunch of hedge funds and RAAs and others who are into this who will need to take a bit of profits into year end. I think we'll get a bit of a shakeout, global liquidity slowing down somewhat, and then we should re-accelerate into the end of tax season.
The crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of 2023's price fluctuations in pursuit of profits. Yusko's outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a six-figure price target set to unfold in just under a year. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin from $10,000 to an unbelievable $100,000. What do you think about Mark Yusko's prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.